Hello, everybody, and welcome to the NASDAQ Dorsey Wright podcast for this week, which is starting Tuesday, February the 16th, 2021. I'm Jay Gregnani, and here joining me this week is Ian Saunders. And hope everybody had here, at least in the U.S., had a nice long holiday weekend. Also hope that everybody is staying safe, as well as trying to steer clear of the winter storms that are wreaking havoc, it seems like, through a lot of different parts of the country. Here in Richmond, Virginia, I think we were spared the brunt of a lot of the damage that we've seen, but still ice storms coming in over the weekend. Number of people losing power here in Richmond, but I think we're certainly seeing that trend turn a little bit as most people now have gotten power back on just in time for another storm to come in on Thursday. So we'll see how that goes. But nonetheless, hope everybody's staying safe and healthy out there. And, you know, a couple of things that we wanted to mention and talk a little bit about this week are some of the things that are in the headlines. One of the big, outside of all of the storms that are happening, one of the big things in the headlines this week is seeing Bitcoin rising to above $50,000. And it's been remarkable just to watch Bitcoin. Obviously, Bitcoin brings with it and has historically brought with it quite a bit of volatility. Nonetheless, hitting historic record levels as has been the market over the course of the past couple of weeks. So that certainly shouldn't go unnoticed or unmentioned. But the fact that Bitcoin is moving back up to $50,000 is quite remarkable. And for those of you who are not familiar, but have clients or yourself interested in looking at Bitcoin from a point and figure perspective, we a number of years ago began tracking a lot of these cryptocurrencies. I won't say we have every single one, but certainly Bitcoin, and you can see the symbol there, $BTC. All of the cryptocurrencies that we track on our website are available under the chart list section, and there's a special reports down there towards the bottom that says cryptocurrency. So the vast majority, I would say, of the cryptocurrencies that are out there that you or your clients might be familiar with will be accessible under this page there. If there's something on there that you don't see that you want to know about, let us know. We can certainly take a look at getting something added there. But for those of you who are interested in cryptos, that is certainly something to take a look at. Another, I think, interesting stat, as Ian and I were talking about cryptos and Bitcoin specifically, is according to Gemini, which is the platform that you can trade cryptocurrencies on, that Bitcoin now, I guess as of last night, had a market cap of just over 900 billion. So to put that in perspective, there's 4 companies within the S&P 500 that are north of $1 trillion. So if Bitcoin were a company, it would be roughly the 5th largest holding in the S&P 500. That's pretty remarkable. The second largest, again, just over 900 billion for Bitcoin. The second largest by market cap perspective is Ether, which is just over 200 billion. And then you drop off from there. The next one, I'm assuming I'm going to pronounce this right, Cardano. Ian, correct me if I'm wrong, is just over 27 billion, as is Polkadot, just over 27 billion. So still a lot of cryptos in terms of their market cap. A lot of those out there are well over $1 billion. I shouldn't say a lot of them, maybe call it just eyeballing that, a dozen, maybe a couple dozen there. But Bitcoin obviously being the elephant in the room there, the big gorilla at just over $900 billion. So pretty interesting. But as we mentioned, there's a lot of research and data that you can get on the crypto space on our site as well through the access to charts and the likes there. So, but as we continue to move forward, we've not only seen nice breakouts across a lot of the crypto space, but we continue to see, as we mentioned, the equity markets continue to push to new highs, and as a matter of fact, continue to see positive developments from a number of our equity indicators.
That's absolutely right, Jay. So, I mean, as a lot of maybe conversations over the long weekend might have tended to gravitate more towards Bitcoin and whatnot, with that being more in the news. We continue to see domestic equity indices hit new all-time highs as well. saw an interesting report this morning that said it was almost 1 out of every 3 days so far this year that the S&P 500 has hit a new all-time high. So I mean, continuing to see that consistency of improvement, and something that we've seen reflected in some of the indicators, as you mentioned there as well. Looking at stuff like the bullish percent for the New York Stock Exchange, ticker BPNYSE on the platform, measures the percentage of stocks, roughly 2,000 names in the NYSE that are on a current point and figure buy signal. We saw that reading get back up to 78% in January of this year, and then decline into a column of O's down to a chart level of 66%. So still up in the upper third of that reading, but had definitely seen that declining participation towards the end of last month. But then actually last week, this chart reversed back up into a column of exits at 72 and moved a bit higher to 74%, putting us back up above that 70% threshold, which is denoted by, for those that are following along on the platform or on YouTube, denoted, you can have the option to turn that on with a red line across the screen there. So we've done a little bit of research looking at what we typically see for the broad market, at least from a forward return standpoint for the S&P 500, looking at the percentage of days that we see kind of positive returns with moves north of 70%. And we actually see that we generally tend to see pretty positive returns for the S&P from a week to 1 month to 3 month to 6 month out standpoint after we get back above that 70% level. So, I mean, in looking at it, it can oftentimes be thought of as, okay, well, moving up into elevated territory for the bullish percents, showing increased participation from a lot of the names underneath the hood, but can also bring thoughts of frothiness to mind, wondering if things are potentially getting too overbought. But we actually see that looking out forward, we would see at least 70% or better returns of the actual instances from when it hits 70% and continues to move higher, that we see 70% of those returns better and then continue to improve from a forward return standpoint the further out we go from that movement north of 70%. So definitely a sign of further improvement and further kind of strengthening that we see underneath the hood, that the BPNYC is continuing to tick higher. And this carries over with many of the other bullish percent indicators that we have on the platform, BP, SPX, some of the other more focused bullish percent indicators, also swinging back higher into a column of X's, continuing to show that increased participation. And something, Jay, that we were continuing to look at here. I mean, obviously, with the market continuing to hit new highs, we see increasing participation from some of these readings. We're looking at some areas that have maybe led to some of this further increased participation. And one name that has been mentioned frequently in our research throughout the past several weeks has been the energy space. But looking both at a few different kind of aspects of energy, and then coming in here looking at the broad Energy Select Sector Spider Fund, ticker XLE, we've seeing this fund march a bit further, a bit higher here this Tuesday morning and into this Tuesday afternoon at the time of this recording, up about 2%, improving to a new high for this year, up at a chart level of 46 after it returned to a buy signal there last week. So, I mean, the XLE energy space has certainly seen a fair amount of volatility over the course of the past few months, but comes in with a solid fund score of 3.84 and a very strong score direction of 3.75. Showing that real significant improvement over the course of the past few months here, Jack.
You're right, and you look at XLE, and that's really hearkening on the kind of traditional energy companies. You've got Exxon and Chevron, those two names combined for about 45% of the weighting, or about 45% responsible for the movement of XLE. And, so the traditional energy names certainly have been doing well here over the course of the past number of months now. But, energy, traditional energy as a sector, it doesn't have a very big weighting in the S&P 500. It's a matter of fact, it's the second smallest, just behind real estate, and about 2.5% of the S&P is relegated towards looking at, again, traditional energy companies. But, you look at some of the other areas of energy outside of the traditional sense, and, you've seen a lot of strength across some of the alternative energy areas, the clean energy, the specific, solar and those types of names, which they don't typically get classified as energy, so they're not going to show up within the energy classification, as a lot of them may be more tech oriented or industrials focused from a classification perspective. But for instance, like the Invesco Clean Energy ETF PBW, that is a ETF that has an overall positive trend, continues to push to new highs. I mean, it's got a score nearing 6 of 5.96, and just continues to produce this very consistent series of higher tops and higher bottoms. And so that's, one name within the clean energy space that you could take a look at if you wanted some energy exposure in that space. And again, to contrast that a little bit from, say, like an XLE, the PBW or QCLN is another one out there that's clean energy. Those are going to own names that are in the solar industry space. Those are going to own names that are in that alternative energy space, that are not in the traditional oil production or drilling capacity in there, but it's a lot of the technology names that go into the solar panel installation, or could be wind power and the likes there. But those clean energy areas, they've not only seen tremendous strength over the course of the past, call it year. I mean, 2020 was a big year for a lot of those names, and we've seen a lot of those companies just get much bigger. A lot of increase in terms of the interest and asset flow within a lot of these clean and alternative energy ETFs, whether it's the clean alternative energy theme that investors are looking for, or some of the conversations that we've certainly been having are using the clean energy theme as a way to invest impactfully in more of an ESG and socially responsible manner. So either way, from a technical perspective, the clean energy theme, that sector, PBW, QCLN, two examples within the clean energy space of ETFs that continue to show positive technical pictures today. The energy space is certainly an area that continues to get a lot of attention from the traditional sense as well as the clean sense. But the commodities that relate to energy too are among some of the strongest that we've seen out there.
That's absolutely right, Jay. And coming in, there's a few different ways that we can look at kind of strength underneath the hood of some of the individual commodities that we have on the platform. One of those being through the pre-made matrices tool that we have available. So those that have access to the matrix tool should have access to a variety of pre-made matrices. One of those is the continuous commodity matrix, which takes a look at the 21 different kind of continuous charts of commodity futures that we track here on the platform. And in coming in and looking at that matrix of 21 representatives, we see, maybe perhaps unsurprisingly, crude oil is the top ranked continuous commodity chart that we have in looking at that chart from a buy signal perspective. Gasoline is also found up towards the top end of that matrix at a rank of 5th out of 21 names currently there from that buy signal perspective. We also see that natural gas is in the top half, but if looking at it by the column of X's, has the third most column of X's out of any chart on this platform, or any particular commodity on this platform if you sort it by that X's column. So haven't seen that strength for the natural gas space carry over quite as much as it has for some of the other areas within energy. Maybe that could change in looking at, as Jay mentioned, with a lot of the cold front moving through at least the northern part of the country, maybe increase for more of that heating capability there with the natural gas could lead to some further changes from there. But definitely something interesting to note. We see in looking at the bottom end of the matrix, apparently orange juice and coffee are not quite as popular in quarantine as they were prior to quarantine. Seeing those areas continue to rank towards the bottom, and gold has been another interesting area, Jay, that we were looking at that has shown a fair amount of movement over the course of the past few months, but has definitely declined from a relative strength perspective relative to some of these energy related areas that continue to tick higher and gain signals on these relative strength charts.
Yeah, and you've seen even today, crude oil, front month crude oil futures contracts touching $60 a barrel briefly for the first time in well over a year. And so crude oil just continues to climb and performs well, relatively speaking, against other commodities, but in terms of absolute performance as well. Certainly the winter storms likely impacting a lot of that in terms of just crude oil consumption today. And that strength, and crude oil and energy as it relates to commodities is probably the most important area of the commodity market, just because it tends to be the biggest. A lot of commodity related funds that are broad-based in nature, they tend to, if they're cap weighted or production weighted, like the S&P 500, the bigger companies get the biggest weighting in those indexes, whereas a lot of commodity related indexes, like the S&P GSCI index, those are production weighted, and crude oil is the largest in terms of that. So that's why crude oil, for many reasons, but one reason why crude oil and why we look at the energy markets, and the fact that energy is strong certainly has boded well for the broader commodity asset class within Dolly, as commodities at the end of last year moved up to the number 3 ranked asset class, behind U.S. equities, still at number 1, still very, very strong. International equities at number 2, still strong, and has picked up strength continuingly this year. But commodities has picked up the most strength in terms of the net number of new buy signals that the commodity asset class has added to its tally ranking. So it's still in the number 3 position, has not overtaken international equities, as both of those asset classes have improved and continue to improve this year. And one of the bigger trends behind all of that that we've seen is the weakness in the dollar. That's something that we've talked about quite a bit, but the dollar has been in a negative trend for quite some time, and historically that has been a good thing for international equities, especially emerging markets, as well as commodities. A weak dollar environments tend to benefit international equities and commodities, and that's exactly what we've seen really over the better part of the past year now, since the dollar has been in a negative trend for quite some time. So, but like I said, with that said, big picture, while there's a lot of stuff to talk about in the news, and a lot of new highs across asset classes, whether it's new 52-week highs, like in the case with crude oil, whether it's new all-time highs, like the major equity indexes, or even in the cryptocurrency space, a lot of new highs continuing to be hit here as we move through 2021, as we see new opportunities emerge, or potential trouble on the horizon. We'll be sure to keep you up to date through these podcasts, through our videos, as well as through the daily equity report. That's content that gets published and produced every single night. So with that said, hope everybody has a great rest of the week. Hope everybody who is being affected by the storms out there are staying safe. And we very much appreciate you joining us for this call, and look forward to talking to you next week.